Welcome, everyone. Today's webinar is about separating myths from facts, the real value of life insurance. I'm super excited to give this webinar because I know that growing up, I personally did not have a lot of information around life insurance. So I perceived life insurance in a totally different way that I perceive it today. So I'm hoping that at the end of this webinar, you go out with good information. You basically separate the myths from the facts. All right, let's dive right into it. So, I want to warmly welcome you again, and we're going to get started in just a minute or two, and then we'll see how it goes. Just give it 1 minute for more people to join. Right, I see more numbers. So, yeah, let's continue. All right, let's get into it. Welcome everyone. I'm so glad you're here today. The topic we're covering, life insurance, is one of those subjects that most people know they should understand, but somehow it keeps getting pushed to the back burner. And a big reason for that is misinformation. I'm sure you'll agree with me. Today, we're cutting through the noise. We're going to bust some very common myths, look at what life insurance actually does for you and your family. And by the end of this session, you'll have a critically clear picture of whether it makes sense for you and what kind might be right for your particular situation. So let's go. Okay. So here is our agenda for today. I'll start with a quick introduction on myself, and then we'll jump into the myths. And there are some really persistent ones out there. After that, we'll cover the life insurance actually, we'll cover what life insurance actually covers, walk through a comparison of term versus permanent, look at some real numbers on the cost of waiting, and finish with who typically benefits the most. Sounds good? All right. We'll save some time at the end for the live Q&A. And if we're not able to get to that, feel free to reach out to me via the one-on-one Zoom session calendar. So please drop your questions in the chat and I'll do my very best to get back to as many as I can. So a bit about me. My name is KayDaniel. I hold my LLQP license here in Canada, which is a life license qualification program. It's the national standard for anyone who sells life and accident and sickness insurance in Canada. I'm an independent advisor, which means I'm not tied to one insurance company. My job is to find out the right fit, not push one product. Okay. All right. So let's go to the next slide. Insurance is too expensive. That's the first myth. It's too expensive and most people cannot afford it. I can't afford it. That's the myth, right? So let's talk about myth number one. I completely understand why people feel this way. Insurance gets lumped in with all these other monthly bills, and it feels like another drain on your wallet. But here's the thing. Study after study shows that Canadians overestimates the cost of life insurance by 3 to 5 times the actual price. Let me give you a real example. A healthy 35-year-old non-smoker can often get $500,000 in 20-year term coverage for somewhere in the range of $30 a month. That's less than streaming uh, service subscription, right? Now, will it vary? Absolutely. Based on your health, based on your age, coverage amount. But the point is, the number you have in your head is probably way higher than reality. And that assumption is keeping people from protecting their families. I'll show you some real numbers in a few slides that I think will surprise you. Okay. Myth number two, I'm young and healthy. I don't need insurance. I don't need I don't need it at least yet, right? This one is incredibly common among people in their 20s and early 30s. I'm young, I'm healthy. I'll get to it later. Here's the irony of that statement. Being young and healthy is exactly why right now is the best time to buy. Your age, your health, at the time you apply determine your premiums for the entire life of your policy. If you lock it at 28, you pay a 28-year-old rate forever. If you wait until you're 38, you pay a 38-year-old rate forever. And there's a real chance something has changed with your health in 10 years. That 10-year difference from 28 to 38. A new diagnosis, a medication, a lifestyle change. Any of these can increase your premiums or make you harder to insure. Life moves fast. Your insurability can change in an instant. The best time to buy life insurance is when you don't feel like you need it, because that's when you qualify for the best rates. Oh, I'm driving home some messages. Let's go to the next myth. Only breadwinners need life insurance. Myth number three. This one is a bit more nuanced, but really important. The idea that only the person earning the most income needs life insurance ignores a huge piece of the puzzle. Think about a stay-at-home parent. If that person passes away, the surviving partner now has to cover childcare, after-school programs, household management, tasks that are real and expensive, even if they weren't showing up as a salary. Or think about a single individual. Maybe they have student loans with a co-signer, or they are supporting an aging parent, or they simply want to make sure their final expenses don't fall on someone else. Or think about a business owner who may have partners and financial obligations tied to the business itself. The real question to ask is, would my absence create a financial burden for anyone? If the answer is yes, life insurance deserves a look. What life insurance actually does, let's talk about it for a minute. Okay, so now let's talk about what life insurance actually does, because it's more versatile than most people realize. At its core, life insurance pays a tax-free death benefit to your named beneficiary when you pass away. But what that money is used for can vary a lot. Think about income replacement. If your family depends on your salary, the death benefit replaces that income stream and gives them time to adjust without financial panic. Let's talk about mortgage protection. Many families buy coverage specifically sized to match their mortgage, so the home is paid off if your one of the partners is gone. Education funding. Your kids' university plans don't have to derail if something happens to you. Debt coverage. Life insurance can pay off credit cards, car loans, and any co-signed debts so your family doesn't inherit those obligations. Final expenses. In Canada, funeral and estate costs can range between $15,000 to $25,000 or more. That's a real bill that someone has to pay. And for those with a longer term wealth strategy, permanent life insurance can serve as a tax advantage savings vehicle and estate planning tool. But that's a deeper conversation for another day. And now I think about it, maybe I should create a webinar for that. All right. So let's do a quick comparison of the two main categories because I get this question a lot. Term life insurance versus permanent life insurance. Term life insurance is coverage for a set period, 10, 20, or 30 years are the most common. It's the most affordable type, and it's what most people start with. You pay a fixed monthly premium. If you pass away during the term, your beneficiary receives the death benefit. If the term ends and you are still alive, the policy expires, though many can be renewed or converted. Term insurance is ideal for people who have a specific financial obligations they want to protect. For example, a mortgage, income replacement during working years, or covering your children until they are independent. Permanent life insurance, on the other hand, covers things like whole life or universal life. They provide lifetime coverage. It doesn't expire. It also builds cash value over time, which grows tax deferred inside the policy. The premiums are higher, but you're paying for something that would never run out. Think about it for a second. Assuming you live beyond a particular term that you're thinking, that permanent life insurance stays on. But if you hit the one for the term insurance, the policy expires essentially. All right. Permanent insurance is often used for estate planning, business succession, or as part of a broader financial strategy. For most people starting out, some could be a right entry point. It's affordable, it's effective, and it gets the job done. But if you want to make much more and take advantage of the benefits that permanent life insurance gives, it's also a winning strategy. So, what's the real cost of waiting? Here are the numbers I wanted to show you. This chart shows approximate monthly premiums for a $500,000 20-year term policy for a non-smoking male in good health. At age 25, you might pay around $20 a month. At 30, around $26 a month. At 35, you'll be roughly at $35. By 40, that's climbing to around $55. And by 45, could be looking at $90 or more. Look at those jumps from 35 to 45. That's an extra $20 a month from 40 to 45. That's another 37 a month on top of that. Over a 20-year policy, waiting just 5 years from 35 to 40 will cost you thousands of extra dollars in total premiums. And remember, those numbers assume your health stays the same. If something changes, the premium could be even higher. The message here is simple. Time is the most expensive thing you can waste when it comes to life insurance. I hope I'm driving some messages home. Really, I honestly do hope. Who should have life insurance? So, who should actually need life insurance? Let me give you the honest answer. Most people, if not everyone. Parents and families, homeowners, couples, young professionals, business owners, single individuals, and I'll go in detail for each of them. For parents and families, this is the clearest case. If you have children or dependents who rely on your income, this is non-negotiable. It's non-negotiable protection. For homeowners, your mortgage, your mortgage does not, I repeat, it does not disappear if you, right? So life insurance keeps your family their home. For us living in Canada, we know how cold it can be not having a home out there. So life insurance helps keep your family in their home when you're no longer there. Couples, even dual income couples are often living on two incomes for a reason. Losing one can be devastating without coverage. For young professionals, the most cost-effective time to buy, lock in your health rating now while you are young. Key person insurance in the world of business and buy-sell agreements are tools that protect business built if a partner or key employee passes. Then you also have single individuals, deaths, dependents, aging parents, legacy goals. There are many reasons even single people benefit from coverage. If you're wondering whether you fall into one of these categories I've described, the short answer is probably yes. All right. So, in closing, what are your next steps? Before I go into the private Q&A, I want to leave you with this. Life insurance isn't about dying. This is this used to be my thinking. I have to confess. It's about living confidence, knowing knowing that the people you love will be okay no matter what. It's one of the most powerful and often most underutilized financial tools available to Canadians. And it's almost always more accessible than people think. So here's what I'd love for you to do next. If you want to explore your options, reach out to me and we'll figure out a free no obligation conversation. I'll answer your questions and if it makes sense, we can put together a personalized quote. It usually takes about 5 minutes. No pressure, no commitment, just information so you can make the right decision for you and your family. Thank you so much for being here today. This stuff matters, and I'm glad you took the time to join me. All my social media pages are all up there, and I'm sure that was how you found me. Feel free to reach out. Thank you so much once again for joining, and I'll open up the phone to our live Q&A. Okay, guys.